and welcome to Trading Growth and Value Stocks. My name is James Boyd. We welcome you on this December 17th. Here we are, about a week before Christmas Eve, that is. So first of all, I want to wish you a Merry Christmas with you and your family. You're probably doing a lot of parties with your family, so it's a good time of the year. We also have Mike Fairborn with us in the chat. He is a good friend of mine. I sometimes have to pay him to be my friend, like today, but anyway, Mike is a good man. Thoroughly enjoy talking to Mike. I'm going to spend some time with Mike today, and he's a good man, and I always try to get some information off him. Now, just real quick, we'd like to welcome Kevin, Lena, Bill, Grace, Robert, and many others. Welcome to all. Now, this class, Trading Growth and Value, very important. We've been reestablishing a portfolio over the last, 2 days or so, today being day 3. Technically, I'm off today, but I wanted to teach this class anyway because I want to see if we can establish some more positions. I mean, every day is kind of key, especially when the volatility is going up a little bit. We'll talk about that. Now, just real quick, remember with what we discuss, the information is provided for general informational purposes only. Also remember that when we talk about examples, we'll look at things in terms of a technical viewpoint, but also a fundamental viewpoint as well. Now, also remember, when we talk about investing, we will show examples on the paper money software application, and the risks are associated with, there are risks associated with dividend paying stocks, and they may reduce or stop paying dividends. So that's not a contractual obligation that they have to pay dividends. They choose to pay dividends. And also remember that investing involves risk, including loss of principal. Now, what I want to do first off is I want to kind of make sure you're aware of something. So last night, I did post, so on Monday we did a video, we called it Day 1 of 2026. I posted that right there. I also posted Day 2, which was yesterday. I posted that right there. So this link right here is going to take us to the page right on X. If you don't have those 2 videos and you're on X, you can just click on that link, and what you're now going to see is you can just click on those 2. So make sure you're aware of that, okay? Now today's class is really about stocks. And we're going to do it from a technical and a fundamental standpoint, okay? So understand that it's not going to be any derivative investing. We're going to use that for tomorrow. Quick reminder that if you go up to, let's say, this previous post, let me just go back to this right here. I did give the schedule, and if you said, James, I didn't see that. What time did you do that? Probably about 9 o'clock Eastern. You're going to see that right there. It's going to give that link. Let me just double check that myself. Just want to make sure. Yep. So that link is going to take us to this. So if you say over the next couple of days or sessions that you're going to be doing, what will you be discussing? Why should I come and take notes and review and take notes and review and practice in the paper money account? Well, that's going to be our schedule. So locked and loaded. Now, let's kind of talk about just real quick something that we've been looking at over the last couple of days, okay? Now, on Monday, we talked about really reestablishing a portfolio and talking about how the VIX is kind of important in terms of making the decision, in terms of what strategies are we going to pick, but also are we likely going to be seeing some buying or selling conditions. Now, from Monday, here's where we were on Monday. And if we went back to Monday, we actually saw there's a green shade. If all I know is there's a green shade, volatility is building a little bit. What does that mean to you? Well, if you ask me that question, what does it mean to me? I'd say, if look, the volatility is actually going up, that probably means maybe there's probably more stocks pulling back. Now, that's been true, okay? So this is not a search problem. This is not you can't find them problem. You just have less examples of stocks going up. Now, if we're trying to build a portfolio, that's not bad, because if the volatility goes up and the stocks actually go down, that actually means in this case that some of those stocks might kind of be a potentially better setup after a pullback. Now, that's the idea, okay? Now, does it mean that every stock is pulling back? Well, of course not, okay? There's Tuesday, here's Wednesday, and we're still pretty much where we were on the other day. Now, this Friday is the expiration day, okay? So sometimes you can get some volatility around that, so be aware of that. Now, again, if the VIX is going up, we talked about maybe some investors might consider doing strategies that have more of a defined risk associated with them. The only way a stock investor says defined risk is if the stock went to zero. I'm not really sure if I would say that's defined risk, but sure. Okay. Now, what I want to do just real quick is I want to go through just briefly from what we're seeing on the VIX to just real quick, like what are we seeing on the indexes? Okay. Now, if we're looking at these indexes, and I'm going to just fast fire just real quick. When you look at the Dow Jones itself, what do we see? Dow Jones below the moving averages. We're on a daily chart. Again, VIX goes up, price levels go down. That's what we're seeing. This is not a you problem. This is not a me. We can't see the entries. There's less entries right now. Now, sometimes we have to kind of have an understanding of when is it okay to maybe not do as many potential bullish entries? Well, number one is when there's less signals. And so what you got to understand something. Cash is a position. Cash is a position. Okay. Now, when you look at, let's say, the SPX, that was a crossover. And over the last 4 days, we cannot get above the 10-period moving average. Is that a buy signal? Well, for many investors, that's not a buy signal, right? This is where sellers are in control. If we just look at the red shading, it's saying sellers are in control. And there's a lack of buyers right now that are actually being able to push the price back up to the upside. So again, sellers in control, trying to get the price to get pushed down near those areas of support. When you go look at the NASDAQ, it has been nothing to look at on the NASDAQ. NASDAQ has struggled over the last 4 days or so, 5 days, 6 days, and you're going to see the exact same thing here, just selling off below the 10-period moving average. Now remember, we always say this. If the price is below the 10, the prediction is down, and actually the forecast is pain. Pain for the bullish investors who are trying to get in, pain for the investor who is actually holding in the pullback. Now, so this tells us if we went and looked at, let's say, the NASDAQ type stocks, you're probably going to see that these NASDAQ type stocks, man, it's tough to find stocks in the NASDAQ that are going up. And that's true. Of the three that we looked at so far, Dow, S&P, NASDAQ, the one where we would probably have a better chance to find stocks that might be going up is the Dow Jones itself. The S&P fell down, the NASDAQ fell down. Remember, the S&P is not equally weighted. If we pulled up the small caps, the Russell 2000, it also is down below the moving average. So, I mean, here we are, right? We restarted a portfolio and we have the indexes kind of pulling back a little bit. Now, not dramatically, but they have pulled back. Now, if we go and say, okay, that's just the indexes. This is just a collection of sectors. Well, what about sectors themselves? Super quick. When we actually look at, let's say, the IXM, that has looked a little stronger than the indexes that we saw. So we're going to kind of note here, okay, the financial sector. And I'm going to go back to this list right here, and I'm going to put this about right. Let me go put that, let's go that right there, okay? Now, when I go through this list of sectors, okay, there it is, I'm going to kind of do control space bar for any sector that stands out to us, okay? So control space bar. So when I do control space bar, if you're on a PC, it's going to put a little check mark there, okay? If you're on a Mac, I won't say anything today. Command space bar, okay? Now, the other place I want to kind of just show just real quick is when you look at basic materials, that actually kind of looks like it's holding up pretty decent, maybe flag-like condition. Looks different than the indexes, doesn't it? Now, you go back to that. If you take a look at that, we're going to do control spacebar. Now, if we also went and said, well, what about, let's say, the IXY? The IXY today made a brand new high. So do you see why we look at the sectors? It's not just look at the indexes. The indexes are a collection of sectors. But when we actually look at the sector, now we're driving to that specific neighborhood itself. So there's 3 sectors that are standing out so far. Now, which ones aren't? Well, you got SOX, which is really in trend 1. Obviously, with that, what if I said SOX semiconductors in trend 1? You'd probably see technology in trend 1, and it is. You see industrials in trend 5. Are industrials horrible? Well, they're not horrible, but they actually broke out to the upside and actually fading back. That's not super strong, at least as of today. You look at utilities, trend 1. What do we see there? Holy smokes, struggle, okay? And now if you take a look at, let's say, the communication, that is holding, it's labeled as trend 4 right now. which means it's up against an area of resistance. And if we kind of said, is it bouncing? Is it breaking out? And we would say none of the above. It's right at the area of resistance. I can't put a check mark on that one. Just not doing it. It's on a relative strength basis, it's decent, but it's just kind of right there. So that's one we'd say keep an eye on in terms of resistance. The one that this kind of is showing trend 3, which is the staple space. Now, the one thing is about this, if you look at this staples, it has reversed back to the upside. We know that that's been an area that's been underperforming for the year. How could we actually see that? Well, if we actually went back to, let's say, the market watch, what we're now going to go ahead and actually do in this case, we're going to bring up, let's say, the sectors. And if we pull up the sectors, let's just take a quick look at the year-to-date returns. Now, here we are in the last 2 weeks of the year. And sometimes the areas that have lagged for the year tend to sometimes get a decent push the following year earlier on. Now, that's a thought. We'll find out. If we looked at an area that has actually been one of the weaker ones, it's really staples. It's only gone up year to date 1%. So going into 2026, I think that's an area to watch. I think if we said like a little another area to watch, we obviously actually take a look also at that same spot is really the real estate area, which has been low. Energy with the recent pullback has been low as well. But if we're talking about something that is really showing now, if you look at energy and you said, well, is that showing relative strength? And we say we can't say that. If we looked at real estate and said, is it showing relative strength? The answer is in the last 2 weeks. If we said of the staples, the energy, the real estate, which of those three is showing the strongest relative strength compared to the S&P over multiple durations of time, like as we're seeing, it is staples. Okay, so that deserves maybe a little discussion here today. Are there any opportunities in that staple space? Okay. Now, the comment is from David. How does one get those trend labels and formatting? Now, are you talking about on the market watch or are you talking about on the charts? Okay. Now, just real quick before we look at our first trade example, if you said, hey, I would really like this chart, let me share the grid. And if you're watching this on a recording, I will put it in the description as well. Now, I want to go back to just real quick. Let me go back to that chart. I'm going to go back to a stock that we talked about just a couple days ago, and it was Philip Morris. Okay. Now, Philip Morris was a stock where there has been a downward trend. Okay. 2 days ago, we saw the stock push to the upside. Yesterday, we saw a red candle. Now, when you see like a breakout day and a red candle, what are you thinking? Are you thinking a failed breakout, or are you actually thinking that might be the pause day that turns into a potential hold maybe the very next day? And remember, we've gone over this. 2025, there was 37 new highs. So we should know something about this now. Well, if we break out and we only go down for 1 day and then we actually see it fire back to the upside, that is your classic sign of momentum. The shorter you pull back in terms of percentage from the high, the shorter you pull back in duration of time, the shallower you pull back in percentage from the high, the stronger the momentum is. Now, that doesn't matter. The answer is, did the investor do an example trade on it in the paper money account? That's what we want to know. So if we said, what type of candle do we actually see right here? We would actually say it's a bullish engulfing. Now, is this a close above the high of the low day yet? Well, first of all, we haven't closed. Is it a trade above the high of the low day? Well, the answer is no, because the high of the low day being the one red candle, that's on the 16th. So what we're going to do in this case is we're going to say, look, what is the high of yesterday? Now, I'm going to tell you right now, I think if we said, do most people do this? I would say most people don't do this. When I taught 88 events, I asked people, and it was 85% of the time on 88 different events, do you do buy stops? And 85% of the people at that moment in time said, I don't ever use buy stops. Now, for some people, that might be crazy, because what that actually means is the investor's having to sit there and they're reacting to the price. And what that also says is not really having a plan, and they're having to babysit the stocks. There's orders for that. Now, what I'm going to do is I'm going to say, what is the high? The high from yesterday is 159.86. Remember, this is a stock class, okay? So what I'm going to do is I'm going to set that order right at like 160. What is the high? That high really being about 159.87. So I'm going to put that order just 20 cents above that high day. So it's going to be 160.07. Now I'm going to go back into the paper money count. I'm going to type in that PM so we can put this in the paper money. We're going to do it in the IRA. Let's go to the IRA. We're going to bring it up and we're going to type in 160. There it is. Buy custom with OCO bracket. Now what I'm going to do is I'm going to type in 160.07. Now I'm telling you, so homework assignment number 1 is you better be practicing this in the paper money count. The way you learn is not just sit there and listen or watch. You actually practice. That's what the paper money count's for. We're going to take 160.07. We're going to spread this 50 cents. In most examples, we're going to spread it 50 cents. The narrower that range is, the harder it might be to get a fill. The wider it is, the opposite. So we're going to say, look, it has to go to this price or higher, but it can fill no higher than 160.57. We're going to go stop limit dated GTC. Now, we got to think about that position sizing again, right? If we have a $150,000 account, we said 80% of that was going to be stock-based. And so if we said, well, how much would that be? That'd be 120,000. So if we said 120,000, could we do 100 shares of stock? And the answer is no. If we had a budget of $12,000, that's going to give us probably right around 80 shares. So if I did $12,000 worth of stock, how many shares is that? Survey says I said 80, but the answer really is 74 and change. So if we bought $12,000 worth of stock, it's 10% of the stock section of the portfolio. Okay. Now I'm going to change this and say 75. Now it'd be nice that every position we could just buy 100 shares. Oh boy, it'd be nice, but not always. It's not always going to be the case. Now, what we're going to do is we're going to drop back and we're going to say, look, could it go up to maybe that 169 change? I want to look at the fundamentals here in just a second. I'm going to put 169. And then what I'm going to do is actually underneath, I'm going to say, look, an area of support is really right around 156.63. Okay. Now, 156.63 as a support area, 156.63, less 2%. And what we're going to do is going to set that stop at 153.49. 153.49. So trade number 1, what we're going to do here is this is properly position size with the new account. We got a buy stop limit. So a buy stop limit is used when you're saying, look, I'm waiting for the bounce, but it's not a tall hold, trade above the high of the low day, or call hold. It's not yet. But I am, for example, planning on that if it went to that price or higher, I would like to buy in irregardless if I was there or not. That's what this is doing. Now, if it buys, does it guarantee it's going to go up? No, it just tries to get a fill. So we have a target price at 169. We also got to stop at 159, 153.49. So it's saying if it goes to that price or less, sell the stock. The target and the stop are not valid until the stock is purchased. All these are going to be GTCs. GTC, GTC, there it is. Confirm send. Now here it is. Okay, now are there any questions? Now the comment from Colin is, can we do a buy limit on a derivative type trade? Sure. Okay. So what we're now going to go ahead and do is, there it is, send the order. And it's sitting right there. Why is it not filling? What's wrong with my platform? Is my internet bogged down? No, it's not your internet. We're saying we want the price to thrust to the upside. And the answer is it hasn't done that yet. Now I'm going to tell you the hardest thing is sometimes investing is waiting for the setup that you want. Whether it's a pullback, whether it's a crossover, whether it's a breakout, waiting for your setup. This is waiting for the setup. And it's just using orders to try to actually get those filled. Now, I want to go back to just real quick. Another one, I want to go back to just real quick, Akamai. Okay. Now, when we talk about, actually, just real quick before you do that, let's go back to PM real quick. Let's look at kind of some of those fundamentals, see where they've been. Okay. Now, when we look at the fundamentals, obviously they're a tobacco company. Why does someone actually target maybe PM? Well, it might be, for example, for the dividend yield. Now, the dividend yield is not as rich as it was before, probably, that I can remember. It's only a 3.69% dividend yield, quarterly paying. Its twin cousin, Altria, pays a 7% yield. Now, you might compare that to a CD, a T-bill, a bond, and say, gosh, dadgummit, that seems a little higher than normal. Now, a higher dividend yield doesn't necessarily mean better, okay? But it is interesting, okay? Now, I just want to take a quick peek. Is its twin cousin maybe getting a little push? And so we're going to go into these two tobacco companies. Now, you got to remember something, okay? Which one started to move first? We might say in this case that, hey, it was maybe Philip Morris that started to move first. If one of those actually goes up, could maybe its twin cousin go up? Maybe. We're going to try to look at that. Now, we always talk about these when the stock gaps to the downside, okay? The first level of resistance is, where do we gap down to on a red candle? The gap down, so the body of the candle, where I'm pointing to, is the open. Does that make sense? That's the open. So today what we're seeing is on this price. So let's look at underneath first. Now, by the way, I just want to do a quick sound check. Can everyone hear me good? I'm trying to talk like very methodically, slow it down, right? I'm not going to yell today, even though I thoroughly enjoy kind of doing that because I get into it. But I'm trying to kind of be very kind of just more direct. So what you're now going to notice is actually underneath is there's a little close above the high of the low day dot. Okay. There's a close above the high of the low day dot. Okay, they're fine. Now remember, what do you want on those close above the high of the low day dots? The answer is you would like those to get higher. Why? Well, because if those dots are actually getting higher, that actually means there's probably higher lows on the price graph. That one was actually a little lower there, but you're going to see that today that's higher. So over time, most of these dots, they've been getting higher, okay? The only one that wasn't really higher was that one right there, but the other ones, this one was kind of more equal. They're actually a little higher. Now, if we said, is today a breakout? We would never say such language as that. We would have washed our mouth out with soap. Because if we go to the second graph in, remember that orange line right there, that's a duration of 10 days. That's a 10-day high. So if we say, well, is the candle currently today hitting the 10-day high? It is. So why do we care? Well, if you're hitting a 10-day high, that's like a shorter term breakout. That's a 2-week high. The blue line right there, what you're now going to notice is that is a 20-day high. So that's a 1-month high. So why have a different duration of time? Well, the purpose of the 10-day is to see kind of like the earlier breakout. The purpose of that 20-day high is to really kind of see more like this has been a couple weeks now. The purpose of actually really that line right there, the 55-day high, that's more intermediate. So we are trying to see a little early. You might say, look, I wanted to hit the orange line and it's now coming on my radar, but I really wanted to hit the blue line because that's me showing me more confirmation. Well, when those lines are overlaid on top of each other, that means you're hitting a 10-day high and the 20-day high. All right, that's not a bad thing. Now today, what you'll notice is it really hit both. Okay, yeah, that would be nice. The Golf Channel. Yeah, and so someone asked me, James, you do talk pretty fast, and it is true because anything that I watch on YouTube, I have at 2x speed. I almost never listen to 1x speed. I feel like my brain is more of a Mac where I can absorb more than a classic PC. Okay, and I'm joking with you there. But the biggest actually thing is, it's just like I feel like there's a lot of dead space in there. It's like, dude, just or whoever's talking, just get to your point. Okay, I got other things to do today. So here's the deal. What I'm going to do is I'm going to go back to this trade page, and the purpose of this, when we go back to this chart, let's go back to that first chart. There it is. We're going to look and see, can that fill? Now, how in the world did we get here? How did we get here? Well, when we looked at that IXR, we're just kind of saying, look, is it possible that maybe an under-owned sector that maybe pays dividends, pretty high dividends, could it maybe reverse inside that space? Now, we already saw that it had relative strength compared to the S&P. It had underperformed on the year to date as well, but that doesn't, this is almost like dogs of the Dow. Some of those ones that were beaten up for the year, they start out firing at the beginning of the year. Why? Because they're under-owned a lot of times. So what we're going to do is we're going to look and see, can we get MO to shoot to the upside and trade this little push? Now, this might kind of surprise you a little bit, but we're going to kind of go a little bit more aggressive. Now, if I had an opportunity to do a derivative type trade, someone might say, hey, look, I might try to do that and try to do a little leverage. Understood. We can't do the trade because we think it's going to go to 62. We probably need to think that maybe this might try to go a little higher. So when I bring up this MO position, I'm going to actually right click on the chart at the current price, buy custom, and I'm going to go with OCO bracket. So that target to the upside. Now you might say, well, James, I'm going to try to sell right at that first line of resistance. Okay, but that's just like if it fills in the gap. Now, could it do that? Maybe pretty good odds. If it actually went to 61.92, could it actually go to 63.79? If we look at the 63.79, that's really think of this as the high that I'm pointing at. This really being the secondary high, or where we really broke down from. If we said, what is a bigger area of resistance? We might say it's not 61.92. It's probably really that area of around 63. So I'm going to put right around 63.25, and underneath us, which is going to be a tighter stop, I'm going to set that stop right underneath the 20 period moving average. So the 20 period moving average really being 58.90. Now, when we do this, just real quick, is if I go less 2%, it's going to give us 57.72. I still feel like that's really, really close. I'm from the entry. And it's about $2. I'm going to give it a little bit more percent. I'd rather have a wider chance of a wider stop and lesser chance of getting stomped out than getting stomped out prematurely and the stock moves up in my favor. Where's that line again? About 58.84-ish. I moved a couple pennies. But if we look at that 57.07, I'm just trying to give a little bit of room, okay? I'm not a fan of setting tight stops. Too great of a chance of getting stomped out. Once you get stomped out, you lock in the loss. I don't know what there is good to say about that. Now, if we do this and I go back and say, how big of a position? We're going to go back to that $12,000. $12,000 on a stock section of the portfolio of 120. If we do 12,000 of 120, it's 10%. Now, it's going to be 201 shares. We come back to the 201 shares. What I'm going to do is I'm not going to do 201. I'm going to take this back and say, look, just give me 200, okay, in this paper money account, and we're going to look and see if we can get this to move, okay? Well, now, so here's the deal, okay? Now, some of you are just super surprised that I'm such a soft-spoken person. Yeah, here's the thing. I can go both ways. What I can't stand is people that are monotone. It's just tough to listen to. My attention deficit disorder just takes over at that point. Now, what I'm going to do is trade number 2. We're going to buy the shares in the paper money account there. Now, remember, that's a limit order. So that's the limit in which it's willing to buy up to, but no more than. So if that current stock price right now is $59.59 at the mark, we could get filled lower. If it fills, we got a target, and then we have a stop underneath. We're going to go send. There it is. Now, this trade was not necessarily done because it wants the dividend. Do we know how long it might take to go up to the low? I have no earthly clue. When's the ex-dividend date? The ex-dividend date is 12/26. Can anyone tell me outside Michael Fairborn, what does that ex-dividend date mean? What does that mean? Okay. So if we actually looked at the ex-dividend date, that means what? Okay. Now, many investors are saying, James, Christmas is here. My expenses are higher than normal. I'm going out to eat with my friends at really good Italian restaurants. and I want to actually maybe try to get some dividend paying stocks to help me pay that maybe is paying a dividend sooner than later to help me actually try to pay for those potential paper money expenses. Well, you're probably like most people, okay? Now, so we have to own the stock prior to that, okay? Own the day before to get the dividend. So the way my mind actually thinks about that ex-dividend date, okay? So if we kind of, now, by the way, if you said, James, I actually really don't know. What is ex-dividend? Well, why don't we actually just Google it, okay? I mean, why don't we do that and just say ex-dividend date? What does this say? Okay, so really, if we say the ex-dividend date, it's the cutoff for new buyers to qualify for the dividend, okay? So feel free to, now, by the way, in the income course, they actually kind of go over that terminology of record date, ex-dividend date, etc., declaration date, things like that. So it's the cutoff for who receives a declared dividend. Now, so trade number one, let's go back to this just real quick. What was the filled order? The filled order was MO. The second one was really PM, okay? Where's that order right there? It's going to be in, let's go down. It's right there, okay? Now, remember, it hasn't filled yet because it hasn't got up to that price. Now, I do want to take a look at a couple more stocks here, okay? Now, a couple ones that kind of caught the eye a little bit, and I just want to see if there's any questions real quick, okay? Don't want to leave anyone on the hook here. All right. Now, I want to go back to just real quick, a couple stocks. So remember we said the IXM. If you looked at the IXM, that sector was getting a little bit of a push. It was holding up stronger than the others. How could we see that? Well, if we went to the market watch, if I said, hey, let's look at just real quick, we could rank this by 1 week percent. If we look at the 1 week percent, we could say which sectors are acting a little stronger than the other ones. Well, I mean, the worst is SOX. The last 1 week, it's been down 8%. It's basic materials that's really been up the most. Shouldn't be a surprise. Gold is actually up. Now, remember, I said gold, precious metals, they are acting like a consumer staple. Now, it's not consumer staples that we think about, like soap and stuff like that, and detergent and shampoo and cereal and deodorant. This is kind of more consumer staples for money, okay? Or something that might retain value, which, by the way, that's kind of pretty important there. Well, so the third is just, I got to come back to discretionaries in just a sec, but there it is, financials, okay? Now, the one thing that you're going to notice on this is when you look at the trend, like trend weekly, trend weekly, trend weekly, trend weekly, trend weekly, they are in trend 3. Why are we, so you're going to notice that there's some areas that really struggle. I mean, real estate, trend 1 on the weekly, trend 1 on the weekly, trend 5 on the weekly. What does that mean and why do you care? Well, because that means if I go look at those areas, I don't even have the wind at my back in terms of having a strong trend on the weekly chart. So what is it that we're trying to do? Just tell me, just tell me. I'm going to tell you exactly what we're trying to do. We are trying to get the weekly chart to get a trend to our daggum back. If we had that trend weekly strong, a minimum of 2, preferably a 3, that's a better chance that the daily chart could actually be strong. Okay? So it's kind of concerning. If that trend weekly is showing to the downside, man, that means you're probably buying into something there's been some pretty strong downward trends. Now, I want to kind of say this. Now, sometimes, how many of you have ever been tempted to buy stocks that have been pushed down? Has anyone ever said to yourself, my gosh, I would really like to buy some of these stocks that have been pushed down? Now, there is what's called investing temptation. Investing temptation is stocks that are low and you want to buy them because you don't think they can go any lower. Now, one of the stocks that has been out of the corner of my eye, okay, that some investors have been watching is really Adobe. And they've been pushed down. And that has been a stock that in the last 2 days, if you looked at it, you're like, wow, we got down to a fresh new low. And the last 2 days, we've been pushing up against the week. Well, actually, the last 2 weeks, we've been pushing up against the 30-week moving average. The little concern about this chart is, man, we could not get above a trend 2 condition since like early spring. So if someone has been holding onto this stock, this has not been a fun ride. You probably are sick of it. Okay. Because it can't get out of that trend 2 condition on the weekly chart. So we're going to keep an eye on really Adobe, but if Adobe starts to push above that 30-week moving average, this is one where we're going to actually say, look, set an alert, because if all of a sudden those people that have been bearish or not in general, this could actually be one where maybe some investors decide they're going to get in something that has been a little weaker. Now, we know a buy stop order is literally a pending order to get in, but an alert is not a pending order to get in. It's like a Ring doorbell, okay? It's like a light on your garage where someone walks in front of your house and the light turns on. Same idea. So what I'm going to do is I'm going to go down to create an alert, and I'm just going to say, look, I'm going to try to get in if we get at or above the moving average. So wherever we right click on the chart, that's where we want that alert to be set. Now I want to set an alert on that in the next couple days, a week or so. Can that get a reversal? Okay. Now I also want to go back to another one, which has also been beaten down pretty good. The other one that's been beaten down pretty good that is also maybe trying to do a shorter term W bottom, not yet, it hasn't made a higher high yet, okay, is really Colgate. Now, I'm showing you this because there's been some questions like, hey, James, you normally just buy upward trending stocks. Do you ever look for ones that have been pushed down? Yeah, I just looked at these this morning, okay, for a class example. So what we did here is we put alerts on Colgate-Palmolive, and we also looked at this actually on Adobe. Now, why is this of potential interest? Well, it really kind of comes back to, you can find companies where the sales per share is still been solid. When we also look at this and say, wow, the earnings per share has still been solid. Dividends over time have been increasing over time. And what really might excite an investor if they said, hey, what's the free cash flows as well? If they have sales per share that is leading to that free cash flow, and they're sharing some of that dinero, geld, moolah, whatever you want to call money. If they're sharing that with investors, they're saying, yeah, the stock has been down, but the business is still intact. Now, the one thing is, if we went back and said, well, what are the multiples like? Well, when we look at multiples, it's PE, right? Price to earnings. It's at 22. The 5-year average on this is at 28. So it's a little bit less than where it's been over the last 5 years. Price to cash flow, 16. Its 5-year average is 18. Price to book, you're going to see it's 75. We don't have a 5-year average. But the biggest actually thing is on this is what some investors do is they look for businesses that are still intact, but just maybe on a stock basis, they haven't been as attractive as other things that have had strong growth. Now, when can that change? When those growth areas start to struggle, they come back to mama and daddy, those cash cows. You weren't expecting that, I can tell. No, that's not the first time I said that. But the biggest thing is they come back to those businesses that are spewing revenue, spewing earnings. And they say, hey, these are good businesses. And just the stock has been pushed down. So we're going to put those two on the radar. Okay. Now I want to go back to that. Let's go back to that first chart for just a sec. We said the other day to keep an eye on the cruise lines. We know that everyone likes a good trip. I can't say cruise line out loud, because if I say cruise line out loud, my wife's going to say, take me on a cruise. I don't want to go on a cruise. I did one, I'm done, at least for a while. Now, if we look at this, that has actually gotten a fairly decent push over the last couple of days. RCL has also gotten a little decent push. Okay. And the other one that maybe you were watching is NCLH. That one probably had a better push. That was really your classic break the horizontal resistance and filling in the gap. That hit the target today on that. That was about a 4-day push to the upside. Now, is that saying that it can't ever go up anymore? No, that's not saying that. Okay. Now let's take a quick look before we look at our before I go back to the indexes, and I don't have anything else here. Okay. Now remember, when we started this week, we thunketh that the VIX might increase. We actually said the VIX might actually increase, which might cause some stocks to drop. That might cause investors to change strategies. That might also cause investors to change the type of sectors that they're looking at / stocks. Now, if we pulled up and said, well, where's the S&P right now? The S&P is pretty much closer to the low of the session. Now, it's not that we don't know how to invest. We're just saying, look, we just don't see the setups right now. I don't feel bad about that. Cash is a position. We want to try to put the cash to work when there is something to invest in and the price is above the 10-period moving average. We're below the 10-period moving average, so that means those bears are around here and they're knocking the price down. Some investors would rather have their cash sitting on a nice, fat, fluffy pillow until the price gets back above the shorter-term moving average at a minimum. Noted. And when we actually take a look at the NASDAQ, again, that struggled the most. Now, the one of the things that we keep saying, but we want to re-emphasize is, hey, James, we were up this morning. I need you to stop saying that. It's not that we were up in the morning. It's where do things close? And even if we were up in the morning, if you have been selling off, when you are going through a sell off, you tend to be up in the morning. Okay. The up in the morning is only interesting if the trend is or the price is above the shorter term moving average. And it's been up above the short term moving average. So when we came into today, were we up above the shorter term moving average? The answer is no. So the real moral of the story is it doesn't matter where it opens. I mean, if it opens higher, great. But you got to make sure we close above that short term moving average. Okay. Now, I do want to also go back to just real quick on the Akamai. We're going to show this example. Now, this one's kind of maybe a little dangerous in the fact that it's technology based. Noted. Okay. Now, sometimes you got to remember is that some of the technology stocks might perform a little bit better than maybe the group as a whole. We go back to this on a 3-year weekly chart. You know, I'm actually really starting to think about your golf comment. Maybe JB should be doing golf commentary. I like golf. Not any good at it, but that would be nice. I mean, it's just pretty to go out for a ride. Now, on this one, what we're going to do is we're going to try to, now, one of the setups with, like, some people like flags, other people like channels. I don't know if you've noticed, but we like to look at channels sometimes. Okay, I'm not sure if you noticed that. Now, what we're going to do in the last couple minutes, we're going to come in here and say, look, is it possible to try to buy these shares on a crossover? Okay, is it possible to buy these shares on like and I got to go to the paper money account. So I want to go back and take a quick look at this. Where's that upside target? Well, that upside target is at 101. Wonder if we said, James, I am not as optimistic as maybe this is. Where's the midsection of this channel? I'm going to mark that for us. So if you said, I don't think it's going to go up there, we're going to put it at 95.42. So let's knock this down in 2 minutes. So when I bring this up, we're going to right click on the ask price. We're going to go to buy custom with OCO bracket. We're going to put $95. We like to shed a little off that. Now underneath here, what we're going to do is where's that moving average? Well, the moving average underneath is 87.25. The second moving average in this case is at 85.54. Now, you might do this different. You might take the shorter term moving average, the one above us. We're not. We're going to try to give a little bit more room, less 2%. It's going to give us 83.86. So if I set the stop at 83.86, yes, type it in right there. Okay, so the third trade example is in technology. Now, notice what we try to do. We're not trying to buy in the same area. Okay, this isn't tech. We're trying to spread the portfolio over 3 sectors at a minimum, preferably 5. We do not want just high growth areas, because if that growth obviously starts to stall or pull back, etc., or volatility goes up, those areas on a percentage basis tend to be pushed down more aggressively. So we're going to try to play a channel trade, which is going to be another theme to this year. Now, if we say, could we buy 100 shares? Yeah, it could. Okay. Now, if we look at that, we'll stick to the 100 shares. It's not going to be quite $12,000. So it's really like using 3/4 of a position, which would mean the per share risk is, or the dollar amount is not as high as what the cap is. We're going to go ahead and go confirm and send. Remember, it's saying if the stock goes to that price or less, then sell it. It could be filled at a lower price level. Now, if you look at where that limit is, it's higher than that ask price. We're going to come back down and say, could it actually fill pretty quickly? We would expect it would, because the buy limit was higher than what the mark was. Did it fill at a lower price level? It did. Okay. And if that filled actually at the price level, if we look at that messages, where did it fill at? It filled at 88.87. So we did 3 trades here today. PM first, second was Mo, and actually the third was Akamai, all stock trades. Now remember that tomorrow we're gonna go into the trend trading. Trend trading we actually describe as really 2 to 3 weeks to 2-3 months. We're gonna discuss it in terms of a sample plan. The 22nd, then we're gonna get into the swing trading, 2-3 days to 2-3 weeks. Put it on your schedule and join us. Now, want to wrap it up here, but remember that with what we discussed, I want to give you a heads up as far as what's coming up next. We got managing an option portfolio with Brent Morse. Also want to, for example, remind us that throughout the day, we have other classes. We've got Michael Fairborn with us. He's going to be teaching trading price patterns. Join him at 1 p.m. Eastern as well. Now, remember, with what we discussed here today, it was done for informational purposes only. Try to do a smooth delivery here today, kind of being direct as far as the strategy and the choices. Remember that all investing involves a risk, and we'll monitor these trades over time. And with that said, this has been the class on trading growth and value stocks. Thanks so much. Have a great day. Take care. Bye-bye.